Great. Well, we're actually going to take a slightly different format here. We're going to ask the same first couple of questions to you both so you can really talk through the innovation strategies. And I think by doing that, we'll really get a sense of both commonalities and the differences in your two approach. So, Rich, if I start with you, can you explain a little bit about the Telus approach to innovation? Yeah, how you approach these things?
Sure. So we have a group, Telus Ventures, which I run. We have folks across the country. I'm based in Vancouver. We've just hired some folks here in Toronto and Montreal, as well as folks in Edmonton and Calgary, not in the Ventures group, but that certainly support our activities. And basically, we have three pieces of what we do. So the first piece is we make investments, not surprisingly, so a pure kind of corporate venture capital approach. I'll talk maybe more in detail about each one of them, but the second one we do, and it's something that's kind of been launched in the last year, and I haven't seen it done that much, but it's what we call a catalyst program. So it's somewhere between investments and operations. So we're kind of incubating, and sometimes it's an external group that we kind of incubate, and sometimes it's an internal group that we incubate, but we're basically launching mini businesses. And we're saying, okay, here's the problem we're trying to solve, to the earlier point. Here's a little bit of capital. You figure it out. We'll support you with how we can. And we view the business units as kind of the first customer of that. But we say, listen, if we can't get our act together, you go work with somebody else. And so it's trying to really drive market discipline into new product creation. And then the third thing we do is and this has really been an emphasis of mine the last year since I joined, is really trying to drive better ecosystem relationships. So we have sponsored things like the Vector Institute in AI and a number of the incubators, and we've done our first fund investment in Scale Up, which is a fund that's been mentioned a few times here, sponsored by the Ontario government. So we're really trying to take place bets and develop relationships across the ecosystem.
Yeah, it's really helpful, Rich. Gabriel, same to you. What's your approach?
Yeah, sure. So, first of all, I guess I'd start with the objective of innovation. Sort of the mission is, at the highest level, how do we tap into ideas and bring ideas into the bank, or surface ideas from within the bank that then we can use to, better client service, right? Provide new experiences and products and services, or to improve our own employees' experience in terms of their day-to-day work. And improving our own operational efficiency, risk management, and those kinds of things. So that kind of is the overarching objective. And the way we go about doing it is it's a lot of the similar kinds of things that Rich was mentioning. Like we have a ability to invest in companies. We have a number of labs across North America and even in Europe, basically where we have large presence that are working on turning some of those ideas into proof of concepts, pilots, pushing things into production. I heard the earlier panel, this notion of intrapreneurship. We're also engaged in that, right? Getting many more employees. Our RBC is somewhere between 78 to 80,000 people globally. Most don't have a direct sort of mandate in innovation, but many are very interested in innovation. And so we've been creating programs that engage many more people across the bank to be participating in innovation and ideation. And then lastly, maybe, again, something that we've been doing in the more recent past, engaging much more into academic level scientific research, so basic fundamental research in fields like artificial intelligence. So Vector Institute that Rich mentioned, one of the things that I think RBC and all the big banks have been supporting. But in addition to that, we've been working very closely with the likes of University of Toronto and University of Alberta, who happen to have two of the sort of leading AI labs in the world, to build up our own team of researchers. So we actually have on staff a small number, but very, very strong and talented experts in the space of artificial intelligence and machine learning. In a way, we're trying to figure out how do we sort of tap into ideas, sort of in the whole life cycle of an idea, from germination, which typically happens for science-based ideas at universities or on campuses, to startup companies, to bigger tech companies perhaps, and then obviously also looking from within, our own ideas from within the employee base. So, we're trying to cover really the gamut there across, all the businesses and functions of RBC.
And that's really helpful. Gabriel, thank you. We heard a little before from Paul Desmarais III about how, in many ways, large corporations have been built on efficiency, trying to improve things. I'm just wondering if you could both describe some of the tools that you use, to try and drive that innovation in a way that perhaps Six Sigma had driven efficiency for a large corporation. What do you use? Lean startup, anything else? What's your approach? I'll start, Rich.
Yeah, so I always say, the purpose or the function of a large company over time evolves to kind of mitigate risk. And so our job in ventures, which I try and advocate for all the time, is to embrace that risk. And so we try and, say it's not always going to work. And of course, people nod and they say, yes, we understand that. And then you come back and you say, it didn't work. And they go, what? So it's always an education, up and across the organization. Luckily, we have a CEO who kind of understands it. And just to step back a bit, we've been investing since 2001 at Telus Ventures, and so we were one of the first. And it was kind of the initiative of the then new CEO, Darren Entwistle, who's been in the seat most of the time since then. So Darren's got a kind of personal commitment to it. He understands it. He understands the tolerance. And so what we are able to do as a result of that, and by the way, we've performed. Historically. So we've returned, we kind of look at weighted average cost of capital. We say, we need to return that from a financial basis and then all the strategic benefits on top. And so we've been able to do that, which of course affords you more luxury. So some of the tools that we use, we do have these, again, it's been used a few times, these collision days where we bring people together and say, okay, here's a problem set. Let's get some of our executives, some startups together. We haven't done as much of that, and I'd certainly like to see us do more. One of the things that we've done recently, again, since I joined, and we'll see, it's a short-term experiment, but the biggest problem I see, I don't know if you're the same, Gabriel, is there's a asymmetric risk-reward profile in large companies between the ventures group and the business unit. Specifically, they sometimes come to us and say, hey, this is a really great deal, we should invest in this. And we say, yeah, great product, crappy company. And so they go, yeah, that's great, but we really want you to do it. And so there's this kind of back and forth. And what we've sort of said is, okay, guys, put your money where your mouth is. So we now affix, depending on sort of various parameters, we now affix a percentage of the gain or loss of the investment to the business unit. And I can tell you, generally speaking, most people, when we're first doing the deal, everybody's holding hands and skipping down the hallway. It's great. When we come back, let's say the company needs more money, there's a bridge round, things haven't gone so well, then everybody starts saying...
That never happens, right?
Yeah. But everybody starts saying, oh, wait a minute, well, maybe we're not quite as supportive, or maybe we aren't quite as enthusiastic about that. And that's when the tension comes. And so what we've said is, you want to do a bridge in this company that we don't think is worth supporting or continuing to support, you're going to own the downside, the risk.
That's a great approach. Gabriel, any tips, any suggestions that these folks can take away with them?
Maybe I'll just pick up on what Rich was saying. I mean, we don't share exactly the same challenge, primarily because, I'm not a venture arm, and we don't look at venture the same way as a venture fund or venture capital investors would. We would be able to cut checks and put capital into companies that we're strategic partners with, but we don't typically lead with a check, and we, certainly in recent years, never actually put an investment into a company that we're not already, partnering with. It's an ability for us to be able to cement partnerships that we already have, but the reality is, the venture part of our innovation portfolio is never really going to move the dial one way or another for the bank, right? In terms of a financial sort of outcome. Back to your question on, efficiency and sort of the objective of innovation. I mean, efficiency is obviously something that's important for large companies, and it does, that kind of thing does move the dial on our financial results. But the way that we look at it is more than just being more efficient. It's sort of, automating or streamlining processes to allow our people and the talented people that work at the bank to do more meaningful value-add things, right? Being able to spend more time with clients as opposed to doing sort of, administrative work. Also from the perspective of being able to sort of automate things that then increases efficiency and reduces, the operational risk that comes along with anything that, has sort of less or more variability when it comes to, human intervention and sort of off-standard processes. And then the other thing is, like, from the perspective of being able to deliver, you know, experiences today, many are digital, right? Many are going to be on your mobile or online. Essentially, we've also had to become a big software delivery company, right? And so the ability to actually, you know, push out products and push out sort of iterate on the type of software products that we build requires us to be much more agile, much more able to sort of iterate quickly, you know, all the buzzwords, you know, test and learn, fail fast, pivot, all those kinds of things are enabled when you have more efficient and more streamlined processes. So, you know, doing things, you know, agile teams and, you know, Scrum and all those kinds of things are the things that we do that increases efficiency, but that's really as an outcome to other more important objectives that we're trying to reach.
Makes absolute sense. That's great points. Thank you. I mean, Rich, just interested, you've set up or you've run a number of VC firms before joining Telus, and so I'm just interested if you've got any key learnings that how you found running an independent VC firm, in effect, and, you know, now running, you know, Telus Ventures, that sort of corporate angle. What have been the differences? What have been the, you know, the options that, you know, corporate venture has brought you, I suppose, that you didn't have before?
Well, what's that old saying? I mean, maybe your group that framed it. It's, you know, the old Fred Astaire, Ginger Rogers thing, you know? So regular VC, you're Fred Astaire, and corporate VC, you're Ginger Rogers, backwards, doing everything backwards in heels. It's just harder. There's more nuance. There's more challenges, tactical and strategic with the business units. There's more people. You know, the bureaucracy, the politics, all of those things you'd expect. And also, in our case, as a large public company, you've got the quarterly pressures which affect, you know, decisions on portfolio actions and things like that. So it's just more stuff. At the end of the day, though, when I joined, I went through our portfolio historically and current, and I said, okay, let's distill down. Let's almost do kind of a, you know, a soft regression analysis. What went well? What didn't go well, and why? And if you had to simplify it, the single biggest issue affecting success or failure was the quality of the investor syndicate. And that's kind of obvious to financial VCs, but a lot of times as strategic, you go, we want the product or we want that company. We don't care who else is in the deal, or we don't care as much because we can drive it, we can make it successful. And I've been on this soapbox of saying, guys, we're not always the smartest ones in the deal. You know, if you're the smartest one at the table, it's the wrong table. So I always say, look, we need to be thinking not only about the best product, but the best company, and those are not one and the same, and then getting the best syndicate together. And that's had actually already a pretty impactful outcome.
That's a great point. Gabriel, I mean, the shift up to VP of Innovation a couple of years ago now, you've had a chance to, you know, really see under the hood of the whole big bank, and, you know, it's a unique ecosystem, I think, in Canada and globally that you're approaching it. So what have been some of your insights and lessons, and how do you think about that broader framework of innovation?
Yeah, it's really unique, actually, I feel like, in Canada, because as part of my role, you know, I do quite a bit of traveling, right? I deal a lot with sort of my counterparts in Canadian banks, but also other Canadian companies, and then beyond Canada and US and other parts of the world. A couple of thoughts. I mean, like, working within a big company, you know, like, there are pluses and minuses. I tend to think, you know, like, for some of the things that we want to be able to do, a little bit like what I think, Rich, you were saying before, we have to be operating on the edges of the big company. And, you know, we do have that responsibility, as well as some of the autonomy that we're afforded to be able to push the boundaries on things that you wouldn't expect sort of the BAU businesses and functions to do. So that's both a responsibility as well as a luxury, I suppose, of what we're able to do. You know, it does mean, though, you know, you are dealing a lot with people in the big company, right? So sometimes I, you know, talk to startup founders and CEOs and, you know, who are partners. It's like, you know, it's the devil you choose in a way, right? Like, if you work in a big bank, you're typically not having to go and raise money, right, every few months, right? It's not the same pressure of a board and investors that are coming after you. We probably have a longer time horizon in terms of having to prove out things and get to sort of revenue, and which are all the kind of things that startup people have to deal with. But on the flip side, you're dealing with a big bank, you know, it's a big company, and the processes that come with that, and some of the constraints that perhaps smaller companies wouldn't have. The other point I wanted, that it really only recently occurred to me, and it was a question that was asked of me by a partner in the U.S. And it's back to the point I was making before about some of the investments that RBC has been making in things like AI, right? And the Vector Institute is one, right? There's a AI-based competition that we've sort of led with Magna called Next AI, right? Which is really about fostering entrepreneurship from AI talent to take the science to build into companies, commercial opportunities. And there are many other things where we get involved, the work with the universities and so forth. And my American friend was asking me, like, why would RBC do this? Like, is this, just truly out of, altruism, like the sort of altruistic nature of RBC and your CEO, it's truly that strong? And what I didn't realize, and we actually explored this a little bit, was that in Canada, the banks are some of the biggest companies. And in fact, we as an industry, I think, would probably be the biggest industry in the country. Versus in the US, even the biggest banks put together, they are a force, but you've got much bigger companies like the big tech companies, and the Amazons of the world and so forth. And so the banks don't play as prominent of a role in the conversation in the country around the direction that you want to push things like innovation, right? The policy conversations that need to happen. And so that was a real sort of eye-opener for me, and sort of, it's not about altruism, but more the role that we can play and probably should play, right, as big corporate leaders, as sort of representatives of the private sector, to push some of these conversations and also put our money where our mouths are, right, invest in some of these things. So those are a couple things that I thought, working in a big bank, over the last couple of years, I've picked up on that I thought were, kind of cool.
Yeah, that's a great point, actually. I think if we drill down into a couple of examples now, actually, if we think about that sort of, we've heard over the past 2 days a lot about the team ethos within Canada and that sort of esprit de corps almost that has been formed in the country. And I'm interested, if you think about blockchain, we haven't heard actually almost anything about blockchain over the past couple of days, but it's quite an interesting technology, even beyond Bitcoin into Ethereum and some of that. And so how does Canada approach something like that? We've heard about AI. What about blockchain? Gabriel?
Yeah, first of all, I think blockchain needs to be approached, sort of agnostic of, or, like outside of borders, right? So, you can probably do a bunch of interesting things within Canada. In fact, there is a sort of partnership that is public, right? Some of the work that we're doing with a company called Secure Key, where I think all the big banks are part of I guess essentially an identity authentication type service, which will run on distributed ledger technology or blockchain technology. Those are the kinds of things that, frankly, like the analogy I sometimes use is like it's kind of like having, a first cell phone, but it's no good if there's nobody else to call because you're not, yet on the right same standards or protocols, right, or on the same frequency, let's say. And so you do need the, partners or network players to come together to agree on certain standards. And in this case, in Canada, right, with this authentication use case, we have come together. But on blockchain, the potential is so much bigger, right, and so much more broad, and have global ramifications. And this is where I think we're still in the process of really, having the industry trying to figure out, right, where that, where those protocols are and what the standards are going to be in order to fully realize the potential of blockchain. And by the way, it extends far beyond just the financial services industry, although this is the space where you have really large banks and financial institutions around the world trying to come together to do something that can set some type of standard.
And just to pick up on that, the other application, so I don't know if folks know, but Telus is the largest health IT company in Canada, and then you talk about healthcare applications for blockchain. So we're actually an investor in Secure Key with you guys,
right.
And we've just funded a company that's working with them called Ubase, which if you're in the health field, there's a guy named Eric Topol, a famous cardiologist, kind of a man about town in the space. Anyway, wrote the book Patient Will See You Now. Anyway, he's he's the I guess the founder of this business, and it's got a really interesting application. You think about what carriers do and what financial institutions do, which is have broad networks of secure data moving it kind of across layers, and then having patient records and securing that and allowing things like pharmacogenomic repositories, data repositories to be accessed securely and remotely and kind of down to the individual data file level. That's blockchain. I mean, that's perfect for blockchain. I actually think, with the caveat that I don't know much about financial services, I actually think healthcare is the more interesting application.
Yeah, well, I think the ramifications actually, there could be interesting ones about the venture capital industry once you get into blockchain, DLT, and moving into that area. But we can save that to a whole different theme, perhaps. But Rich, if I pick up on that, healthcare segment, we had a great opening speech by Terry Stewart earlier talking about how do you think roll the clock forward 30 years or 15 years. I think you've been doing some really interesting work in terms of looking at adjacency. How can you see Telus move, and what sort of adjacencies are you starting to go into?
Sure. So just again, by just level set, I don't know if people know. So we have a franchise. We have a number of products that we sell. So we're the largest vendor in the electronic medical record. So I describe it as a baseball diamond. First base is doctors. Second base is pharmacists. We're the largest pharmacy vendor in Canada, pharmacy management system vendor. And then third is kind of insurance carriers, claims adjudication. And so we're one of the large vendors in that. So, and then home plate, the home run is consumers, right? We have 14 million consumer connections. I would say very few of them know that Telus is in health. So now the strategic thrust is how do we take the Telus and put it in Telus Health, which is our operating line in health. And so as part of that, what Ventures is doing, back to my comment about these catalyst initiatives, so we're starting businesses and we're basically saying, here's 3 or 4 themes. So pharmacogenomics is one, primary care, what we call primary care plus. So how are people going to interact with their primary care doctors in the future? It's going to be all technology driven. It's going to be a very different experience. I think we're all aware of that. And it's not a private public thing. It's going to be different. So we're starting businesses in that and funding them and partnering with them. We're building a platform, back to this notion of what we have as a carrier grade platform. So there's lots of, I don't know where Luke has gone, but lots of little startups across Canada, and they all struggle because they all have to build a technology stack to secure data, store data, access data, provider registry. They have to do all this stuff, and we're saying, that's not your differentiator. Your differentiator is this little tiny thing up here that you're doing. Why don't you let us provide this stack for you? There's some economics that go both ways, and you provide the thin layer of differentiation. So we're taking a very, hopefully, thoughtful approach to building this healthcare ecosystem that then is going to drive consumer benefits and patient or provider benefits, et cetera.
Fascinating. That's a really great example. We're down to the final few minutes actually here. So can I open it up to the floor, see if there are any quick questions? We've got some real superstars here on stage, and Rich and Gabriel. So now's your opportunity. Put them on the spot. We've got a question over there. Luke, if you can just wait to the microphone, say your name for the camera as well.
Hi. Yeah. We're on the world stage as Canadian, and this is more true than ever. As Canadians, and you're leading at Telus, and we're the BDC here, how can we lead, but on a global basis, and drive innovation in either sectors or in ways or in approaches? How can we stand out and lead on a global basis as Canadians?
Well,
please, go Gabriel.
I mean, I'll start, and then Rich, please add. My belief is we have to pick our spots, right? We have to, be pretty honest with ourselves as Canadians to say, what are areas that we are really strong at, that we have a right to win, and then really double down and triple down on those areas as a country. Because when you're talking about global leadership, you are really talking about, competition against the best in the world everywhere else. And, that's typically how others are able to excel. And so I see that we are starting to do that in areas like AI and machine learning. Some of the recent announcements in the last couple of weeks where, it's really encouraging to see, public sector, all levels of government coming together with private sector, with academia, right, to say, look, we believe that we've got something really special here in artificial intelligence and machine learning. We've got the academics, we've got the companies, right? We've got now the government support, and most importantly, we've got the talent in the country to be able to, hopefully claim or reclaim that mantle to be the top, one of the top, if not the top AI nation in the world. But I think this idea of having to, really pick our spots and focus our investments and double down, right, on topics, on specific groups or people or areas, is an important idea because too often it's a lot easier perhaps to say, well, we're going to sort of divvy out the resources and let everybody have, have a little bit, but then you're really diluting the impact of what you may be able to achieve if you really focused. So that would be my thought.
I mean, it's been talked about so much, I'm not sure I have a ton to add, other than saying so I agree with everything emphatically. Somebody referenced Thomas Friedman's new book. Like, the cost of starting a company and scaling a company has never been lower, and it's only getting lower, and the cloud will be on your desktop, so, your phone, sorry. So your infrastructure is nothing. So what is really hard, and I'm differentiating now kind of between science and R&D and the commercialization. And I think what's still hard is distribution and customer access and education. And so, again, from my narrow perspective in a carrier now, some of the things we're doing is we're trying to, I'll give you a very tangible example. We're trying to take technology that's been developed in Canada, and we have a bit of a leadership in healthcare at Telus, and what we're saying is we go to all the global carriers in the world, all the global communications carriers, and we say, we have this. Why don't we syndicate investments? Why don't we give you global distribution rights? Why don't we give you, we'll share marketing and ad spend to support this company. So we're, the little phrase I use is we're trying to go from picking winners to making winners. Mm-hmm. And so, it's early days, it's embryonic, but last week we had 10 global carriers. I think the stat was 32% of the world's population was in the room talking about what are the healthcare innovations we can drive as a collective. I think the more of that you see, and so health is one and AI may be another, I think the more of that, like, let's get in together, shoulder to shoulder, I think that's going to benefit everybody.
That's a great example. Well, I'm conscious we're coming towards the end of a couple of great days here, so I don't want to make sure we run over time, and I'm going to hand back to Neil, but please join me in thanking Rich and Gabriel.
Thanks, man.
Great.
See you.
That was wonderful.